Hello. Our today topic is be able to calculate income tax and national insurance contribution for taxpayer, which is second lecture of personal taxation. Good day, everyone. My name is Yasir Gulfraz, and I'm your tutor for today's session. Our lecture is about Unit 5 of IFA Personal Taxation. In this session, we will focus on learning outcome 2, which revolves around our, ability to calculate income tax and national insurance contribution for taxpayers, understanding how to calculate these financial obligations is important for anyone navigating the realm of personal finance. Uh, Whether you are an individual managing your own taxes for a professional providing financial advice to others. So we will discuss the various aspects of income tax and national insurance, breaking down the process into manageable steps and explore key concepts. So you can check your knowledge of employment income, saving income, and property income. One means no confident at all and as confident as possible up to 10. Indicative contents, we will discuss personal allowances, application of relief for pension payments and charitable donations, calculate of income tax, calculation of national insurance contribution for employees and employers, tax planning techniques to minimize tax liabilities, tax and national insurance rates, bands, then common benefits in common benefits in kind and how to determine their value. So calculate taxable income from employment, investment, and property. So if anyone is there, can you guys see my screen and can you hear my voice? If please do let me know if there is any issue. So in calculating taxable income from various sources such as employment, investment, and property, we need to consider different tax rates and allowances. Let's break down the process here step by step. So tax rates and bands, there are different tax bands for income, dividends, and saving. So for example, basic rate income up to 37,500 pound is taxed at 20%. Dividends at 7.5%. We discussed previously. So higher rate income between 37,500 £1 and 150,000 pound is taxed at 40%. Dividend at 32.5%. Additional rate income over 150 is taxed at 45% and dividend at 38.1%. Then allowances here you can see yes, allowances such as the personal allowance, saving allowances, and dividend allowances reduce taxable income for instance, personal allowance 12,500 pound is tax-free income for individuals. Saving allowance 1,000 pound for basic rate taxpayers and 500 pound for higher rate taxpayers. Dividend allowances 2,000 pound is the tax-free amount for dividends. Income limit for personal allowance, if an individual's income exceeds a certain limit, their personal allowance may be reduced. So this reduction is 1 pound for every 2 pound over the income limit. Property allowance Here, annual limit is £1,000. Property have a £1,000 allowance reducing the taxable income from property. Individual saving account or ISAs provide tax-free saving with an annual limit of £20,000. Car benefit percentage for company car, the taxable benefits depends on the car's CO emission. The higher the emissions, the higher the taxable benefits percentage. By applying these tax rates and allowances to the income received from employment, investment, and property. So we can calculate the taxable income for an individual's. Understanding these concepts helps individuals manage their finances efficiently and ensure compliance with tax regulations. Any questions so far? Okay, now in understanding the source of income and how they contribute to one's tax liability, we first look at various type of income and applicable reliefs. As you can see here, source of income can come from various sources such as employment, investment, and dividends from shares. Then minus relief, certain deductions, exemptions, or allowances may apply, reducing the taxable income. So this includes deductions from expenses related to earning income, charitable donations, and pension contributions. Then we come to the here personal allowances. Uh, Individuals are entitled to certain amount of tax-free income each year, known as the personal allowances. So these allowances may be reduced for those who with higher incomes, particularly if income exceeds over here can you see 100,000 pound. So then taxable income. So after all deductions, reliefs and personal allowances from the total income, the remaining amount is the taxable income. Saving income, these are specific allowances for saving income, which allows a certain amount of saving income to be earned tax-free. Then dividend income is the dividend income is taxed at different rates depending on the individual's overall income. So there are different tax bands and rates for dividend, income are ranging from 0%, 7.5, 32.5, then 38.1% for income in the highest tax band. Then you can see here tax liability. When we talk about tax liability, means the total income tax liability is calculated by applying the appropriate tax rates to the taxable income from various sources. Uh, Less tax already paid. So any tax already deducted from paid, such as through pay for employment income or tax credit for dividends, is subtracted from the income tax liability. Income tax payable, the final amount owed to HMRC after accounting for any tax already paid is the income tax payable for the tax year. Any questions so far, if anyone is there, or can you? Okay. So here is a calculation of employment income and investment. Again, here is the example of, Nikki receives the following income in the tax year 2019 or 20. 2019 and 20 basically is a specific year, for example, they choose 2019 and 20. So we talk about a specific year, as an example or for a specific tax years. So here we will calculate Nikki's income tax liability for the tax year 2019 and 20 based on her employment income, bank interest, and dividend income. Nikki received three type of income: salary, bank interest, and dividends. So salaries, 50,290 pound, bank interest, 1,300 pound, dividends, 17,000 pounds. So to calculate income tax liability, we need to determine her taxable income. This is done by adding up all her income from different sources. So Nikki's total income before considering her personal allowances, 58,500 and 90 pound. So after deducting the personal allowances from her total income, Nikki's taxable allowances from her total income, Nikki's taxable income is 46,090 pounds. The taxable income is then split into non-saving income such as salary and saving income, bank interest, and dividends for tax calculations purpose. So tax rates applicable to each type of income for non saving income, she pays tax at the bank rate and higher rates, while for saving income and dividends, different tax rates apply depending on the amount. So after applying these tax rates, Nikki taxable income, here we can determine her total income tax liability for the tax year 2019, which is 46,090 pound tax years for total. So income tax, non-saving basic rate 37,000, non-saving higher rate 290 multiplied by above, which is 500 to 30,500 290 pounds. So which is 40% saving income nil rate, higher rate nil rate, then higher rate, and income tax liability 9,561 less pay 8,000. So income tax payable 1,180 pounds. So Nikki is higher rate taxpayer and therefore entitled to saving allowance of 500 pounds. So calculation of property income, bank interest, and dividends. So here is another example of Marcus received 41,000 pound income from property, bank interest of 12,000 pound, and dividend of 7,000 pound in 2019 and 20. So Marcus' income tax liability for the tax year 1920 is calculated based on his property income, bank interest, and dividend income. Marcus' income received from three different sources: property, bank, and dividend. So his property income is, as you can see here, 141,000 pound, bank interest 12,000 pound, and dividends around dividend amount is 7,000 pound. So to calculate his income tax liability, we need to determine his taxable income. This is done by adding up all the income from different sources. So in Marcus' case, his taxable income is 160,000 pound. As Marcus' income is above the threshold, so he's not entitled to receive a personal allowances. Therefore, we don't deduct any personal allowances from his taxable income. So we calculate the income tax liability based on Marcus' taxable income and the tax rates applicable to each type of income. Marcus falls into the additional rate taxpayer category, which means he is subject to the higher income tax rates. For non-saving, as you can see here, for non-saving income, which includes property income and bank interest, non-saving, which includes property and bank interest, Marcus paid tax at basic rates on the first portion of his income, which is 37,500, and then at higher rate on the remainder. remain. So for his saving income, Marcus pays tax at the higher rate on the portion of his saving income that exceeds the saving allowances. For dividend income, Marcus pays tax at different rates depending on the amount of his income. After applying these tax rates to Marcus' income, we find that his total income tax liability for the year amount to uh, 55,755 pounds. Any questions so far, if anyone is there? Okay, so I'll apply personal allowances available to all individuals, 12,500 pounds for 2019, and 20 deductions from net income to give it income, taxable income, non-transferable, cannot be offset against capital gains, lost it, not used in the year, restricted personal allowance, uh, uh, you know, reduced where adjusted net income exceeds 100,000 pound, reduced reduction 50%, multiply by adjusted net income minus 100,000 pounds. Reduction is equal to 50,000 multiplied by adjusted net income minus 100,000 pound. So no personal, allowance is awarded where adjusted net income exceeds 125,000 pound. So exceeds 125,000 pounds, they lose their entire personal allowance. This means that they will be liable to pay income tax on all of their income without the benefit of the personal allowances. It is important to understand these rules surrounding personal allowances to ensure accurate tax calculations and compliances with the HMRC, or tax office regulations. So here again, 2019, we are talking about our previous example when she received several sources of income during his tax year. Her main source of income was her salary amount, which is 50,290. Additionally, 1,300 pound tax bank interest and 7,000 pound from dividends. So to calculate her net income tax, we need to separate her income into different categories: non-saving income, saving income, and dividend income. So Nikki's non-saving income includes her salary, bank interest, and part of her dividends. Her salary and bank interest total 51,590 pound, and while her dividend amount to 7,000 pounds. So we will deduct Nikki's personal allowance from her non-saving income. The personal allowance for the tax year 2019-20 is 12,500 pound. Okay. 12,500 pounds here, as you can see. After deducting the personal allowance, Nikki's taxable income from non-saving sources is 46,090 pound. Next, we need to calculate Nikki's income tax liability on her non-saving income. This will depend on the tax bands and rates applicable on her to her income. Additionally, we need to calculate Nikki's income tax liability on her dividend income. Dividend income is taxed on different rates from other type of income. After calculating the income tax liability on both her non-saving and dividend income, so we can determine Nikki's total income tax payable or repayable for the tax years 2019 and 20. So here determine the taxable value of benefits in kinds. So these are benefits basically provided by employees to employees, so that are not subject to taxation. Example of exempt benefits including certain type of child care assistance, certain work-related training, and some type of welfare counseling services. So these are benefits provided by employers to employees that are subject to taxation. So example of taxable benefits including company cars and fuel provided for personal use, living accommodations provided by the employer, and certain sorry type of beneficial loan. So when we determining the taxable value of benefits such as living accommodations, car and fuel, vans and fuel benefits, beneficial loans and gifts of assist, there are general rules that apply. So these rules helps to calculate the value of the benefits, and that should be included in the employees, taxable incomes. So also just remember that when it comes to the beneficial loans and gifts of assets, the taxable value is determined based on the difference between the official rate of interest and any interest actually paid by the employee. So this ensures that any benefit derived from the loan or gifts is appropriately taxed. So here, further about talking about benefits, job-related accommodations, subsidized canteen, removal expenses, personal expenses paid by the employer during businesses trips and workplace nurseries. So when we talk about accommodation, this refers to accommodation provided by employer for their employees when it's related to their job. So, for example, if an employer needs to relocate for work, the employer may provide accommodation or assist with finding suitable housing. So, there are certain limits on the expense that can be covered by the employer, such as hotel cost and other related fee. Uh, it is important to note that there's a time limit for incurring these expenses or providing benefit to employees. Next one is subsidized canteens. These are canteens provided by employers for their staff, and they usually available to all employees. So this aim is to provide affordable meals for employees while they are at work. Then we moving on the removal expenses. Uh, Employees may cover certain expenses when an employee needs to relocate for a new job, or if their job is relocated. So this can include things like hotel cost, legal fee, and estate agent fee. So there are limits to the again there are limits to the amount of expenses that can be covered by the employees. Then personal expenses paid by the employers during business trip. These expenses includes things like telephone calls, home newspapers, and laundry services. So there are payments limits set by employer, and if the payments exceed these limits, this entire amount may be taxable. Uh, then last one is a workplace nursery is also known as, basically uh, facilities provided by employees to accommodate the child care needs of their employees. Uh, uh, these nurseries can be located either at the workplace or in other, premises managed and financed by the employee. So, uh, now we are going to talk about the provisions of sports and recreational facilities, recreational facilities, mobile telephones, and work-related training expenses. First one is supports and recreational facilities. These facilities are often provided by employers for their staff to use. So, but they are not open to the public. Sometimes they are located right in the workplace. These facilities can include things like gyms, sports fields, or recreational areas. So, we important for us to note that these facilities can also be used by former employees and the families of current employees. Next, telephone employers sometimes provided their employees with mobile phones, including smartphones. So in this case, it is essential to remember that tablets, and computers used for making phone calls using the internet are not exempt from tax. Lastly, we'll cover work-related training expenses. Employees may cover the expenses associated with training their employees for work-related purposes. So this can include things like the cost of course, training material such as books and any other necessary expenses. Additionally, if an employee attend a full-time course, they can receive tax-free pay up to a certain amount per academic year. Any question if anyone is there? Any concerns? Okay. So here we are going to discuss the calculation of taxable benefits, for Gavin, who was provided with a car by her employer throughout the tax year 19 and 20. So we will calculate taxable benefit in respect of the car. We start the determining the list price of the car, which is £25,000. However, as Gavin employer paid only £23,500 for the car after discounts. So we use this a lower amount for our calculations. The car has CO2 emission of 170 gram per kilometer, which places it in the appropriate percentage for benefit calculation at 29%. So we then deduct Gavin contributions towards the capital cost of the car, which is £5,675, as well as her monthly contributions for private use amounting to £480, uh, £40 multiplied by 12. So after the deductions, we find the Gavin taxable benefit in respect of the car is £5,320. So now we will calculate taxable benefit in respect of the fuel used the car. So we use the appropriate percentage of 29% uh, applied to the total value of fuel provided by the employer, which is £24,100, £5,000 for diesel expenses, of which 50% is for private journeys. So plus given monthly contribution of 30 per pound multiplied by 12, since Gavin contribution do not cover the entire cost of private fuel. We do not cover the entire cost of private fuel, so we do not deduct them from the taxable benefits. Gavin taxable benefit in respect of the fuel is £6,989. Respectively, these amounts represent the value of benefits provided by employer, for personal use, which are subject to taxations. Understanding how these benefits are calculated is essential for individuals like Gavin to accurately report their income and fulfill their tax obligations. Calculate income tax liability and national insurance contribution for given data paid on gross income. Class 1, there are obviously we have a class 1 employee contribution, which are paid on gross earnings and are deducted from the employee's wages by employer. These contributions are paid by employees. Next, Uh, Class 1 employees contribution also paid on gross income, but this time they are paid by the employers. So these contributions are calculated separately from the employer's contribution and are deductible when calculating the employee's taxable profits. So finally, we have Class A contributions, which are paid by the employer on taxable benefits provided to employees similar to Class 1 employees' contributions. Class 1 contributions are also deductible when calculating the employer's taxable profit. So, national insurance contributions payable in respect of employees. Uh, you can see that Class 1 primary, secondary, Class 1 employers uh, paid on, first one is paid on gross earning, second one is paid by employers. Okay, paid on, gross earning. Class 1A contribution paid on taxable benefit. So Class 1 employees contributions, uh, employees aged on, these contributions are applicable to employees aged over, 16, and they are deductible when calculating it employer's taxable profit. Class 1A contributions are paid by the employer and are calculated on taxable benefits provided to employees similar to Class 1 employees' contributions. So Class 1A contributions are deductible when calculating the employer taxable profit. So here explain how individuals can minimize tax liabilities. Class 1, Class 1 and Class 1A employee contributions, employer contributions, and 1A. So Class 1 employee contributions can reduce their taxable income by contributing to certain schemes like pension. For Class 1 contributions, employees pay 12% of their gross earning between 8,632,000 pound and 50,000 pound, and 2% on earning above 50,000 pound. Then Class 1 employers contributions. Employers also contribute to certain schemes on behalf of their employees. Class 1 employer contributions, they pay 13.8% on all gross earning above 8,632. So there are an employment allowance of 3,000 pound, which can be deducted from the total Class 1 employer liability. And finally is a Class 1A contributions, 13.8% on all taxable benefits based on the same value as it is being used for tax purposes. So Class 1A contributions, these contributions are based on the taxable benefits provided by the employer, such as company car or health insurance. So employers pay 13.8% on the value of these benefits. Here, example of the JAMI is employed by Drop Limited. JAMI received the following from Drop Limited in tax year 2019 and 20. In this case, his earning for the purpose of calculating Class 1 national insurance contributions include the salary of 71,000 pound and 71 and thousand pound for 71,400 pound, and the value of vouchers exchangeable for goods which amount to 650 pound. The benefit in respect of the company car and fuel, as well as the living accommodations and free meals in the staff canteen, are not included in the calculation of Class 1 national insurance contributions. So we determine JAMI's liability on Class 1 insurance for the tax year 2019 and 20. We need to consider his earning that fall within the Class 1 threshold, national insurance contribution threshold. So for the portion of his earning between 8,632 pound and 50,000 pound, JAMI is subject to 12% national insurance rate. This result in a national insurance liability uh, of 4,964 pound. Additionally, for the portion of his earning above 50,000, he is subject to a 2% national insurance rate, resulting in a further liability of 44,441 pound. Uh, here, so therefore, Jamie's total liability to Class 1 national insurance contribution for the tax year 2019-20 amounts to 5,450.16. This is the amount he is required to pay towards the national insurance contribution for that tax year. Okay, any questions, any concern if anyone is there? Okay, next is how relief for pension payments and charitable donations are applied to income tax calculation. Charitable given pension schemes, payroll giving, gift aid, occupational, personal, maximum contribution method of giving reliefs, employer contributions. So payroll giving, with payroll giving, individuals can donate to charitable directly from their salary. Contributions are deducted from, the individual's paycheck by their employer and then passed on to the chosen charity. A gift adds another method of charitable giving where individuals can make donations to charities and claim tax relief on them. Uh, to benefit from gift aids, individual must be a UK taxpayer and make a declaration confirming the charity can, then claim back the basic rate of tax on the donations from HM revenue and customs. Higher and additional rates, a taxpayer can claim further tax reliefs on their donations through the self-assessment tax returns. Next one is a pension scheme, occupational and personal pension scheme, pension schemes, whether occupationals or personals, provide another avenue for tax, efficient saving. Both employer and employees' contribution to pension schemes can attract tax reliefs. Okay. So employer contribution to an individual's pensions are not considered taxable income for the employee, providing immediate tax relief. For personal pension contribution, individuals can claim tax reliefs on their contributions either at their marginal rate or through their self-assessment tax return. All right. Any questions? So here is a type of schemes, payroll giving and gift aids. So obviously payroll givings give as you earn. Uh, in this scheme, contributions are deducted directly from the individual salary by their employers and they're paid over to chosen charity. Amount contributed through payroll giving is tax allowable, meaning it reduces the individual's taxable employment income. So this method offers a convenient way for individuals to support charities regularly while benefiting from tax reliefs. Right. So then we talk about gift aids. Under the gift aid, as we discussed above, that the taxpayer must make a declaration confirming that they are a UK taxpayer and the charity can reclaim the basic rates on their donations from HM revenue and customs. So the donation made by taxpayer is deemed to be paid net of basic rate and the charity receives the tax amount from HMR. So these schemes provide, incentives for charitable giving while ensuring that individuals can make a positive impact on causes. So they support while potentially reducing their tax benefits. Gift aid schemes and employment income calculations, you can see here uh, Gerald, Geraldine had employment income 1920. She gave 5,200 pounds of Oxfam through the gift and schemes. So her tax liability for 1920s employment income 120,000 less, 120,000 pound. So for personal allowance calculations, the basic personal allowance for the tax year is 12,500. So her pay is, her pay, her personal allowance is reduced due to her income and gift add, donation. So after adjusting for the gift add donations, aid donations of 5,200 pound, her revised personal allowance becomes 5,750 pounds. So taxable incomes, uh, Geraldine taxable income is calculated as her employment income minus her revised personal allowance, resulting in 114,000 and 250 pounds. So income tax calculations, the first 37,000 pound of our taxable income is subject to a tax rate of 20%. The remaining 70,250 is subject to the higher rate, which is, here you can see 40%. So applying these rates, her income tax liability is calculated as 8,800 pound for the basic rate and 28,100 pound for the higher rate. So total income tax liability, adding the tax amount from both tax brackets, Geraldine's total income tax liability for the tax year is 36,900 pounds. Any questions so far? So personal allowance, here you can see the personal allowance is 12,500 pounds less gross gifts contributions. Net income is 120,000 pounds. Gross gift aid contribution, you can see aid contributions 5,200 pound, which is equivalent of 6,500 pound grossed up to applied by 100 divided by 10. So there's a limit for personal allowance reductions calculated as 50% of the excess over 100,000 pound, resulting in 6,750 pound. The revised personal allowance is then 5,750 pound revised threshold. The threshold for higher and additional rate tax bands are normally 37,500 pound and 150,000 pound respectively. So after adding gross gift and contribution of 6,000 pound, the revised threshold become 44,000 pound for the higher rate and 156,000 pound for the additional rate. Type of pension scheme, occupational and personals. So occupationals are set up by employers who usually contribute to them. Employees may also contribute to these schemes. Personal pensions, on the other hand, are arranged by individuals. They provide relief on different ways. So, employee contribution in personal pension schemes, the employee's contribution is deducted from their, employment income when calculating income tax. This reduces their taxable incomes. Self-employed in personal pension schemes are often the only option for self-employed individuals. So also it is important to remember that the gross contributions also reduce the individual's net income tax, personal allowance calculations, employer calculations. So employer contributions to occupational pension schemes are tax allowable for the employers and are not considered taxable income for the individual's taxpayer. Uh, George had in employment income 53,000 pounds. Calculate George income tax liability. Uh, so he paid 500 pounds to his employee's occupational pension scheme, and he paid 400 pound contribution to his personal pension scheme. So which type of scheme make him better off? The first scenario, George employment income is 53,000 pounds. Here you can see. After deduction the 500 pound pension contribution from his income, his taxable income becomes 52,500 pound. Subtracting the personal allowance, 12,500 pound, his taxable income is 40,000 pounds. So for second scenario, George contribution 400 pound for the personal pension scheme, his taxable income becomes 40,500 pound after subtracting the pensions contributions from his employment income. So here we will calculate his income liability for each scenario. So with the employer's occupational pension scheme, taxable income 40,000 pound, income tax 37,000 pound multiplied by 20 basic rate plus 2,500 pound multiplied by 40 high rate. So 7,500 plus 1,000 is equal to 8,500 pound. With the personal pension scheme, uh, taxable income 40,500, income tax 38, 20% basic rate plus 25% on 40%. So which is equal to 8,600 pound, 7,600 pound plus 1,000 pound. So comparing the two scenario, we find that George's income tax liability is 100 pound higher than he contributes on his personal pension scheme instead of his employer's occupational pension scheme. So therefore, contributing to his employer's occupational scheme makes George better off in time of reducing his income tax liability for the tax year 2019 and 20. So in this also in this scenario, uh, we are comparing two methods of pension contribution and income tax liability. So here, if you see that, uh, first look at total payments, pension contribution of 500 pounds. Okay, and then income tax liability is 8,500 pounds. So his income tax liability stands at 800 pound in both scenarios. So compare the outcomes in the first scenario. It contributes sorry. In first scenario, he contributes 500 pound to his pension and then income tax liability 8,500 pound. Second scenario, he contribute 400 pound for his pension, so his income liability increase 8,600 pound. So in both cases, his total payments amount 9,000 pounds. So the conclusion we draw from this comparison is that both methods result in the same overall outcome. Neither scheme makes him financially better off. The amount of tax relief he receives remains the same, only the method of relief difference between the two scenarios. So in terms of working out the extended basic rate band, it's calculated by adding a basic rate bands 37,500 pound to his, gross pension payment contribution, £400 multiplied by 100 over 80, resulting in a total of £38,000. So this calculation is important in determining, his tax liability. So that's it for today. Here are some references. You can go for a quiz as well for further, knowledge. You can visit YouTube for some important videos for income calculations. I can open this for you as well. If anyone is there, you can quickly look at this one. 38 is quite a shock, really. My hearing. This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from Open Tuition. Yeah, this is basically, it's a full lecture. You can visit and you can see ACCA lecture for further calculations. And you can learn more about, tax calculations. So, right. So any questions, concern or issues if anyone is there? Okay, so please, email me if you have any issues or questions. My email is yasir@ukversity.co.uk for any questions or concerns. So thank you very much for joining me today. So I hopefully I'll see you on next Saturday at 11:30 for our third session. Thank you very much, and I'll see you next Saturday. Bye everyone for now.